Welcome to Traders Lessons, your go-to source for educational trading knowledge. Let's dive right in and explore the basics of trading in the financial markets. Trading involves buying and selling various financial instruments, such as stocks, currencies, or commodities. Before getting started, it's essential to understand the concept of supply and demand in the market. Supply represents the quantity of a particular item available for sale, while demand refers to the desire or need for that item. The interaction between supply and demand determines the price at which an asset can be bought or sold. Technical analysis is a common approach used to predict future price movements by analyzing historical market data, patterns, and indicators. Fundamental analysis, on the other hand, focuses on evaluating the intrinsic value of an asset by assessing economic, financial, and industry factors. Risk management is crucial in trading, as it helps to protect your capital and minimize potential losses. One popular risk management strategy is setting stop-loss orders, which automatically close a trade when a specific price is reached, limiting potential losses. Another important aspect to consider is setting realistic goals and developing a trading plan that aligns with your risk tolerance and financial objectives. Successful traders often have a well-defined trading strategy and follow strict money management principles. Emotional discipline and controlling your emotions, such as fear and greed, are essential for long-term success in trading. Patience is key in trading, as it may take time for your trades to materialize and for your strategies to demonstrate consistent profitability. Some common trading strategies include day trading, swing trading, and trend trading, each with its own pros and cons. Always remember that trading involves risk, and no strategy can guarantee profits. Continuous learning and staying updated with current market trends and news are vital to becoming a successful trader. In conclusion, trading involves understanding supply and demand dynamics, conducting technical and fundamental analysis, practicing effective risk management, and developing a well-defined trading plan. By following these basics of trading, you can improve your chances of navigating the financial markets successfully.